to Fox News contributor Liz Peek. We've also got market watcher Sam Stovall and After the Bell co-host Connell McShane. Connell, there are those who, I just had that person on a little earlier, months.
I know, yeah, the whole months and years when the president himself used that kind of language. I think people thought he was being hyperbolic, but we'll see. I mean, what's interesting about this as we move kind of into uncharted territory is that everybody kind of thought if it's like other shutdowns and it lasts a couple of days or maybe it lasts a week, no big deal for the macroeconomy. Of course, people who are not getting paid or are furloughed or businesses that rely on those people are going to suffer, and that is a real and an important story, but we'll make the rest of it up. Now, I think what Jamie Dimon said on the conference call for J.P. Morgan this morning kind of sums it up the best, is that prolonged shutdowns are not going to help the economy. So, yeah, we will make a lot of this up.
He said it would wipe out any growth at all.
Right. But his quote was, yeah, this is not a help. In other words, yeah, we'll make some of this back up in subsequent quarters, I'm sure, when these people go back to work, when and if. Yeah. But, you know, it's not a help. And we're at that point where it's a bigger story than it was.
I'm wondering, Liz, and I raised the same with you, Sam, whether a company sees on this as an excuse for that.
That's the question, right? Because there are an awful lot of trends that are already pretty negative about the economy. Slowdown in China, slowdown in the EU, all kinds of indicators that there's a manufacturing slowdown in the U.S. And there's a wealth effect. We had a big sell-off in the market. How has that impacted demand and so forth? So a lot of things that could be already undermining the growth in the economy. After all, that's why the market slowed down. I mean, the market traded down was because everyone was expecting a slowdown. So what is the incremental impact of a government shutdown? I don't really think we know. I think it's probably pretty small, but it is impacting sentiment. I mean, we always talk about markets not liking uncertainty. This is uncertainty. We don't really know how long this is going to go on. And I'm sure, to Connell's point, there are 800,000 people out there not receiving a paycheck. Right now, they're not spending money, and that's not a good thing.
Right.
You know, Delta Airlines is saying this is costing them $25 million a month. What do you think of that?
Sure. Well, I think we're actually seeing across the board about more than 2 out of every 3 of the sectors in the S&P are recording lower estimates for this quarter. At the end of last year, we were expecting about 6.5% earnings growth for all of 2019. Now it's down to 5.5%.
Are you in the camp that this actually advances the talk that the Fed doesn't hike rates at all this year now?
I think that's certainly a possibility. We have 2 rate hikes set in our economic projections for the.
You wouldn't know it from Fed funds futures, right? I mean, they're pricing no such increases, right? And that was before all of this, right?
And for good reason, because inflation's coming down. Gasoline prices are going to be down so much in February that inflation's going to be barely over 1% probably. So, I mean, I think it's a hard case right now to argue that rates are going to be going up.
Which makes sense that the market would be up today because you have the 2 biggest factors, not to minimize this factor, but if you ask any investor over the last however long we can all remember, which I guess is like a month in today's day and age, is, you know, what's the biggest factors that you're watching? It's the Federal Reserve and it's China. So now, you know, Sam's comments notwithstanding, most people think that the Fed is out of the game for now, not thinking about raising rates unless things change, at least being flexible, as Clarida became the latest Fed official to tell Edward Lawrence in his interview yesterday. Right. They're all saying the same thing. And we have all kinds of reports out of China today that the government there realizes that things are slowing down and they're looking for ways to help stimulate that economy. So
what if the next time it's the Chinese turn to come to the United States, right? One of their ministers at the end of the month and presumably cobble something together. If he goes back without such a deal, then what?
Well, I think that would be a pretty big negative because most people, I don't think, were worried too much about the Fed. I mean, typically, Fed funds are about 1.5 points above inflation. Right now, we're pretty much neck and neck with inflation, so you could still say that the Fed is being stimulative. The earnings slowdown is just that. It's a slowdown because the bar was set so high in 2018 because of the end-of-year tax cuts in 2017. The real question is the global economy. Are we headed for recession? Is the second largest economy going to be doing more than simply stumbling, and will that then drag us into recession as well? You
know, when I hear about inflation not being a worry, and then I see Netflix raising prices 18%, not for everybody, I understand that, and I see a lot of medical and medical equipment makers with double-digit increases, prescription drugs and not prescription drugs that are seeing double-digit increases. I'm beginning to wonder whether there is inflation out there, just not in the obvious areas. What do you think?
Well, that's a good point. I mean,
I make lots of
congratulations.
Yeah, thank you.
So companies that are in a position that get proprietary products and who can raise prices will do that. Drug makers obviously are coming under a lot of scrutiny for raising prices because they can do it. And to your point, Netflix can do it. But I don't think it's broad-based. I mean, there's no indication that wages are going up so fast that that's causing companies to have to raise prices. And again, gasoline, I mean, anything to do with petroleum is going to be at least year over year and month over month looking pretty good right now. Look, there are a lot of reasons and there are a lot of indicators that the United States is slowing. And China is a big part of that probably, and so is the EU. I think what we have compared to a year ago, instead of global synchronized growth, we have global, this is really hard to say, synchronized slowdown. And I think the market
anticipates. It is uncanny, isn't it?
The market is
anticipating. It seems to be going in like domino fashion.
Yeah, it really has. But so the real question is, market watchers should wonder, if really what we care about is, or if the old adage, don't fight the Fed, if that's really true, is this a time to be buying stocks? Because the Fed really probably has backed off. I think probably it is. I mean, people, we had a big sell-off. We've gained some of that back. But we have stimulus being talked about in several European countries right now. China, as you point out, is definitely trying to up the ante a little bit. And if we don't have any negative outcome from the Fed, probably a pretty good time to look at stocks again, yeah.